What is going on, guys and girls, and welcome back to another YouTube video. Today we're going to be having a look at Bitcoin. I had quite a lot of comments saying that I have been quiet on this channel when it comes to crypto, and yes, you are right. My last video I completely explained what I was wanting to see happen, what I would be waiting for before taking any positions, and we've been waiting for that to happen. It takes time to develop. When we see these huge moves, corrections down, it's going to take a while, especially if we are in this wick off accumulation phase, which it appears we are still in now, and it's seeming to be playing out pretty much to a T. And yeah, there's not really been much to talk about because we've just been stuck in a daily range. I've seen a lot of inexperienced traders calling bulls, calling bears at specific points, but realistically, we've just been stuck in daily consolidation between a range of 30,000 and around 42,000, and we've just been moving sideways. This is very normal for this to happen. And in these situations, it's important, as I've stressed in previous videos, to remain calm, stay patient, let the price action form your bias, because if you're taking positions over and over again within that daily range, you're going to lose a lot of the time. So with Bitcoin, we've seen quite a lot of FUD over the past weeks. We've seen the China regulation changes, placing bans on certain provinces in China, which in terms of mining, China accounts to about estimated 65% of all mining activities for Bitcoin. So a very significant change. This isn't new. This has been something which has been happening throughout the life cycle of Bitcoin. This FUD, this fear that's been driven into the market has continued to chop price action around on that daily chart. And I've had messages from people telling me that they're scared, that it's all going to go to zero, that nothing is ever going to remain. Remember, the news, the media, they're always going to manipulate the retail traders, the inexperienced, the uneducated. They're always going to manipulate you to make the wrong decision. So in situations like this, when we're trading or investing in specific asset classes, the best thing that you can do is look at what the big boys are doing. And we can see clearly from the data that I'll show that the institutions are still net long on Bitcoin. And Bitcoin, I use it as an index to know exactly where I expect the entirety of the crypto sphere to go next. I use that as the index and the pointer. So all my focus over the last couple of weeks has been on Bitcoin. I've made no attempt to trade any altcoins because until Bitcoin gives us a clear path, it's very, very hard, and you can see that when you start looking at data, it's very, very hard to guess which altcoins are going to jump at specific points. Yes, there'll be the odd one here and there that will pop whilst Bitcoin's consolidating, but it's extremely hard to estimate which specific one it is. So that's why my focus has been on Bitcoin. Another reason why we've seen this decline back to the bottom of the daily range on Bitcoin as well is the US dollar. So something that I don't hear many people talking about is the fact that Bitcoin's paired with the US dollar, right? BTC/USD. So how much of Bitcoin's increase has been the actual asset class, or has a lot of that growth come from such a weak dollar that we've had since March 2020, when the Fed started printing trillions upon trillions upon trillions of debt? And we've seen the US dollar been extremely bearish over that 16 month period, and we haven't had that strong clarity, and it's made currency markets extremely hard to trade. If you're a swing or a hybrid trader, if you're a day trader, we're still seeing those large daily movements on the lower time frames, on the micro time frames, but in terms of those longer term positions, we haven't seen those trending markets that we've been used to for the previous 4 or 5 years in those environments that we've had, because the currency market has never seen a situation like this. The currency market has never seen the US dollar being printed so heavily, massively devaluing the currency. So it's been a landscape that has been new for the majority of traders in order to work out exactly how you play those markets. Last week, we saw a strong breakout on the US dollar index, which we're going to have a look at first. We saw a strong breakout of the 30-day range that we'd been stuck within. We've got an inverse head and shoulder pattern. We've had some large bullish momentum on that daily, which now gives me the confidence that we're going to have a little pullback before we then continue that bullish dollar bias. Last week was an amazing week. It was my biggest week in terms of currencies. Cryptocurrencies is different, but actual currencies, FX, it's been my biggest week of this year so far. And we ended up banking 13.61% profit over 2 positions. And they just played out perfectly. On Thursday last week, FOMC statement came out and the Fed announced a bit of a change in narrative that they were going to be looking to increase interest rates up to 0.6% by the end of 2023. And the markets reacted strongly to this, seeing what the central banks are going to be doing about the inflation crisis that will happen if interest rates stay that low. So it gave us that clarity on the US dollar that we've been looking for, and that transpired into other markets. It made the dollar strengthen against Bitcoin, and we saw that drop back down to the bottom of that daily range, as well as the FUD that was being used, the China FUD that was being used to drive it back down there as well and scare the retail traders, which, to be completely frank, there's going to be a lot of people who got in at 60,000, 65,000. There's going to be a lot of people who got in at those highs who are inexperienced because they FOMO in. And when you're reading all these things and you're sat 50% in a loss, it's going to drive you to do irrational things like sell out of your position. You never should have bought there in the first place, but now you have to make sure that you have a plan and you're confidently executing on that, relevant to what we're seeing in front of us. So let's dive straight onto the charts. So this is the FXCM US dollar index, and this is what I like to look at when I'm trying to figure out exactly what bias I'm putting on the US dollar for the short to medium term, even long term as well. As we can see from this monthly chart, we had very significant break for the first time in the history of this FXCM US dollar index. Saw the first break of this monthly 50 EMA, which was very significant. We went back and retested it, and then that bearish momentum continued. This run, it started in March 2020, as I said in the introduction, and the US dollar has just been devaluing and devaluing, getting weaker and weaker, and we've seen a risk-on environment where we've seen currencies like Aussie dollar, where we've seen currencies like New Zealand dollar absolutely loving life and just strengthening through the roof. When we're in a risk-on environment, we also expect assets like equities to go up, and we also expect things like Bitcoin and more esoteric investments to increase as well, as investors look for places to put their money, to park their money where they can actually get a real return. So what we saw last week is we were forming this range, which lasted for over a month. Price was just chopping around in this daily range. And then on Thursday on FOMC, we actually had the breakout of this range. We had this strong breakout on the 16th of June to the upside, breaking above this trend line, breaking out of the range that we were consolidating in, and giving us an indication that the US dollar bulls are taking over on the back of what was released on the FOMC statement. We pushed up into the previous daily highs, and we started to see a bit of a pullback here. This is very normal. This is what you expect to see in markets. This will be profit taking and also people looking to get short as well if their bias is still short. So we're now seeing the US dollar being driven back down. It's having a pullback, which, as I said, is to be expected. And I'm expecting to see this push down between this range of 0.382 and 0.75. And at this point, I will then be looking for US dollar pairs and other currency pairs in order to get long the US dollar once we've had that pullback, to now play the next wave of bullish momentum. So let's now have a look at the Bitcoin chart and see exactly what's going on. Firstly, I think it's important to have a look at the weekly chart to stress that the weekly is still very much in a bullish trend. We had the bull run starting back in March 2020 when we started to push, and we broke through these previous daily highs around that November, October time. We've then had a very, very strong run. We had a couple of little pullbacks along the way, but no real major corrections. So now we form this higher high, previous low, higher high, and now we're still very much forming a higher low, which is a bullish indication that momentum is going to continue within the coming months or weeks. It's going to continue back to the upside. Still a resistance up top, and we're going to dive into that as well. But it's important to state the weekly is still very much within a bullish trend. We're holding that daily 50 EMA. We're holding this previous level as now support, and we're also spiked into the 0.618 Fib retracement. Daily, we can see things a little bit clearer. So when we hop onto the daily chart, we can see this is where that Wyckoff distribution happened. We formed a lower high. and that was swiftly followed with a lower low. We've now been stuck in this range since we fell into it in the 19th of May 2020, just consolidating sideways, not really having any sort of clear price action of where price is heading next. And this is where I'm saying you don't want to be trading in these circumstances unless you can get in at the very bottom or the very top. If you're taking trades within the middle of this, you're very likely going to be stopped out because we're still very much just ranging. It's just ranging price action. There is no clear trend here yet on this daily chart. We now have formed something that I've been waiting for. I discussed in my previous Bitcoin videos, and it's why I entered a long futures position on Bitcoin in early hours of this morning that I waited up for last night. So on this daily, we've had this clear move to the downside, and then we've just been consolidating. Markets of breathing. We've seen some manipulation. People were screaming bullish over here, and then we just simply rejected the top of that range, which is why I'm telling you to be patient. And we've come back down into these previous lows that developed here. What's going to be beneath these lows? There's going to be a lot of liquidity. There's going to be a lot of people looking to sell and short the market. And there's also going to be a lot of stops that are going to be there as well. And any stops on positions which have been taken within this daily range, they're going to be below this candle formation here. So that's what the markets are looking to do. The whales look to manipulate price, trap buyers in here by getting a breakout of these highs, but then we're just at the top of the range. So then they crash it back down, make sure that they stop anyone who bought at these levels, spike through any stops that have accumulated along the way, and also trap some sellers in as well. So now we've seen this strong reaction, this daily strong bullish low test candle rejecting all these previous lows. And more importantly, we've broken the bottom of where the previous low had formed. When we saw this big sell-off that occurred back in May, we've now breached the bottom of that, which is exactly what I've been talking about, exactly what we've wanted to see. So the weekly and the daily chart, I really love the development that we have for further bullish moves. On the lower time frames, let's have a look. We have that wick-off pattern that's still very much present. And I've been talking about this lots. And with wick-off, it's not something that's the be-all and end-all. It's just and it doesn't have to be perfect either. A lot of people look for this to be absolutely perfect and every single thing has to play out. No, it's the thought process behind what those moves and different drives and different phases are showing you. And the phase that we've been waiting for is this phase C, where we breach underneath all the previous lows that we've ever seen before, form a spring, and then we're looking now for tests to then come back before that accumulation has occurred, and they look to drive price higher and higher. So the wick-off pattern is still very much intact. On the 1 hour chart, we can see that as well. So all previous lows, this is a candle, all previous lows have been breached. Here's the previous low, the lowest it went, which doesn't show on the line chart because it happened so quickly, at 30,000 pretty much exactly. Yesterday we breached down 28,600, spiking underneath these lows, capturing all that liquidity, like I say, trapping in short sellers. And now we've come back through and taken out their stops as well. So typically when we see this sort of event and we see that spring occur, the next stages do occur relatively fast, because what they want to do is stop retail investors, normal traders from actually being able to capture these moves. So we do want to see this develop pretty quickly. And if it does stall here, if it does start to take a while to play out, then that will raise some concerns in my mind. One thing that I do want to say, so this is my position, which I took yesterday around 1 a.m. GMT. This is my position when we broke through the 1 hour 50 EMA, and also I had all this resistance up top on the 15-minute chart. I entered the position long at that point, and I wanted to cover these previous lows that we'd just seen price pulling back into. There is still a high risk attached to this trade, but because I'm getting in from the bottom, because there'll still be future opportunities, I'm happy to accept the risk. The risk is that the test which we want to occur. We can see on this 4 hour chart, we haven't really had a test at this point. So we're looking for that little bit of it's very possible that we'll see that further dip down before momentum really kicks in. So I could have covered complete lows, and that's going to be the safest trade option. But like I say, I want to be able to make sure that I'm banking good profit on these moves. I want a high risk reward. And also, if it does test down, I'll just simply take another position if this one gets stopped out for 1%. And this is why risk management is important. This is why I only personally execute 1% on these futures trades. My investment side of things is very different. It's not something that I've ever talked about on this channel. I guess we can do if you want to. It's a very different strategy because it's a very different goal from investing to what it is to trading. So this is a futures trade. So the negative, the risk, which is attached now, is that we'd see that test pop down. We could retest the top of this candle. We can retest anywhere along this candle realistically. And that is something that can definitely play out. It's a reasonable amount of probability that we actually get that dip down before price then goes to the upside. But I'm willing to accept it. I've identified a risk and I'm willing to accept it because of the risk reward that I can get and everything else that I'm seeing on these timeframes. So that's my position. In terms of targets, the resistance that we have above, there's a lot of resistance above. The first stage, the first step is going to be breaking through the top of this 41 to 43,000 daily range that we've been forming. We need to see a breakout of this. If we do get a breakout of this, as well as that daily 50 EMA, we can expect to then push up to these levels where we previously broke down in phase E on that wick-off distribution event. So this is where I'll be looking around this 50,000 region to see how price reacts. What would be normal, what price action we'd typically expect to see is we can see price push up into these highs and then pull back down to these levels to then retest this, gather this liquidity, liquidate some stops on the way down, trap in some sellers, and then we can start to see the bullish pushes to the upside where we can look for this high of 60,000 to get taken out. In terms of profit targets, I'm not personally setting a strict profit target on this anywhere near these levels. It's going to be much, much higher for the medium term. However, that's because I know how to actively manage these positions and ensure that when I go into profit, I'm not allowing all that profit to disappear because that's just a stupid thing to do. Shout out Doge millionaire, whose $3 million investment in Doge is now down to around 750,000, which is just absolutely sickening. But that's what happens when you don't take profit from the markets. You have to be taking profits off. The reasoning is, okay, and this is another good aspect to be talking about, we always want to have the capital and cash available so that if we do get larger corrections, we can get back in. So when you're up at these levels and you're running great profit, you want to take a portion of that investment or of that trade, but from an investment, it's easier to talk about. You're going to take a portion off of the table so that when we do see corrections like this, you can then reinvest them. And if you got out at 60,000 here and you had 10 Bitcoin, you can now buy 20 Bitcoin roughly. This is just roughly. You can now buy 20 Bitcoin, double the Bitcoin down here. So if price drives back up to these previous highs, you'll be sat on 40 Bitcoin with the profit running versus the 10 which you originally had up here. That's why taking profits off the table when you're running in significant profit is so important. One, to crystallize it and make it a real thing, but two, so that your buying power is stronger in the future when we do see a correction, so that you can make sure that you're constantly growing your account and growing your account. If you're simply just hodling, if you're simply just holding, you're going to be missing out on extreme amounts of profit. Let's talk about the last scenario, which is if Bitcoin breaks down from here, which it still can. There's still a chance of it happening. I personally like the technicals of everything that I'm seeing, but something that I stress all the time on this channel is you are never going to be right 100% of the time, which is why using things like risk management is so important to make sure that you're not overexposing yourself to individual situations that aren't 100% going to play out. If anything was going to be 100%, we'd all be multi-billionaires. So let's talk about the scenario of this crashing. And if we did see this crash, it would be further FUD created from the government. Whatever that may be, that FUD that is created, that still is a possibility. It always has been in the crypto space. If we do see that happen, we're going to see a large correction to the downside. And this, again, states the importance of always ensuring that you have cash, you have capital on the side to invest. If we see a full bearish run on Bitcoin from here, we're going to total, we're sat about 50% down now, we're going to see 85% correction that occurs. We're going to see an 85% move against us. So if you're 100% invested, you can't do anything at that stage. Whereas when you've taken your profits at the table, off the table as it's gone up, as we hit those previous all-time highs of 20,000, as we're then double 40,000, as we're then triple 60,000, you should have been taking some of those profits off at those levels so that when we're back down and we have that 85% correction, which is typical within the crypto market, Again, it's not 100%, but we've seen it after every single bull run in the crypto space. But what's most important is to ensure that you have the capital in order to invest at those new lows when we get down to that 85% correction. Otherwise, you're going to miss out on so much profit back up on the way. And most people don't think about it, because if you're just simply hodling, at one point, yes, it will then be back into profit. You'll then be back into profit. You'll then see those profits coming in. But if you're taking those profits, redistributing them, reinvesting them at the lows, you're going to gain so much more profit. You're going to, instead of being 100% profit up, you're going to be 1,000% profit up. It can literally make so much difference over a 1-2 year span when you're taking some profits from the table, reinvesting it lower, taking some profits on the table, reinvesting it lower, constantly building your holding, not your monetary amount in it, but your holdings of these coins. That's what's the most important thing. So that's going to wrap up today's video. I hope that was a little bit of an insight into why I'm still seeing this as a bullish scenario for Bitcoin, with the Wyckoff pattern, accumulation pattern still intact, and why I entered that futures long position on Bitcoin US dollar. If there's any questions, make sure to put them in below and I will hop straight on them once this video is uploaded, and I'll catch you all in the next one. But for now, peace out and take care.